Hey guys, it's Mark Sebastian, your only option. And we're going to do things a little different this week. I'm going to talk about how I build a trade and a trading plan using my BETS system, background energy, timing, and strike and strategy. So, what are we looking at today? We're looking at Nike. Nike has had a bear of a week. The earnings weren't great. Boycott in China uh, finally started to recover on Friday, and I want to kind of walk you through the trade I built and how I'm thinking about it. So, as you can see, the implied volatility it could go a little lower. All right, I always start with volatility when I'm building a plan. So the implied volatility could go lower, but it's relatively low. And one thing I really like, I'm going to show you this, is that um, near dated stuff is more expensive than some of the long dated stuff. April, in particular, is really inexpensive in this name. When I pull up the chart, I'm going to pull up a chart here. What I want to show you is, you know, Nike seems to have found a spot to stop going down below 130. 130 apparently is where they draw a line in the sand. As you can see, it's up as I'm recording this by $2.93. So what trade did I build and how? Well, um, let's start with the background, right? Remember, China boycott. All right, bad earnings. Bad earnings are a problem, but the boycotts don't last. The sell-offs on boycotts are a fadeable event. So I want to fade that boycott. Think it's going up, right? I think that it's going to go up. And as you can see, I think it's going to go up pretty quickly, maybe 135-ish, but not with incredible speed. I think it could take it. It'll eventually get to 140, but that could take a couple of weeks. I think next Friday, I'm looking for about a 135 close. So the volatility is relatively low. Remember, I showed you that. So let me show you the trade I built. It is this trade. This is called a diagonal spread. And the way the diagonal spread works is I'm buying April regular. So they expire on the 16th, 133 calls. I paid $2.78 for these. All right. I think it's going to go to about 135. I then sold against it the April 135 calls. This was a trade we did in Trading Legion. So I did this as a diagonal spread. And as you can see, it has gone well. All right. We're currently right here at 131.68. It's up about $65 since I did the trade today. This is a 10 lat. That means it's trading about 206, 207. I'm hoping that it keeps going up. And so the way I would build this going forward is pretty similar. I still like paying $2.05 for this diagonal, all right, because I'm selling more expensive volatility up front, all right, and I'm giving myself some time by buying the regular April options. There's my timing. How did I pick my strikes? Well, remember, 135 is where I think it's going. 133 is close to at the money, so that gives me some long delta, all right, and because I'm selling that near dated higher volatility option, I'm producing a theta, all right. What do I have? I'm long Vega because remember volatility relatively low, but I'm short some gamma. So if this thing goes up too much, I'm going to lose. So that's basically how I built that diagonal spread that I did and what I'm going to do with it going forward. All right. The strategy, my goal is to get $3 out of this spread. All right. Now, what if we just kind of sit here? What do I do if it sits here? Well, I'm going to buy back these 135 calls for about 15 cents. All right. That would probably be like Wednesday if we're still sitting here, maybe Thursday. I would then roll them to the 8th. All right. And then if the same thing happens, I'd roll back and turn this into a regular call spread. Now, if it makes a nice move and I get to that $3 level, I'm just going to take this thing off. All right. What do I do if I'm wrong and this thing starts diving? I will probably start buying a put or two to hedge off some of that risk and move my delta back, move it more delta neutral, move this thing in my favor. So there's the basics behind how I build a trade and how I build a trading plan. Remember, I start with volatility and then I go through bets, background, the energy, that's the volatility, the timing, and then the strike and strategy. All right. So there you have it, folks. If you are interested, we did put out our big video from Thursday. We did that all-day educational event. Make sure you check that out. For those that watch it, we have an educational package that is free, but you have to call us 888-TRADE-01, 888-872-3301, and we'll be happy to send that to you free of charge. All right, but you do have to call us. I hope you have a great rest of your weekend. I'm Mark Sebastian, your only option, and this is Option Pit's Rules of the Road. Have a great day.